Welcome to your Daily Market Explainer for August 19th, 2026. Look, if you are completely tired of sifting through the endless noise and headline panic just to figure out what actually matters for your portfolio, you are in the exact right place. Today, we're cutting straight through the fluff. We are looking at pure market data, the unverified chatter that's actually moving the needle, and the exact setups you need for tomorrow's open. So let's skip the noise and dive right into the numbers.
Okay, the heavy, risk-off mood we're wading through right now, it is absolutely undeniable. Just look at the simultaneous drop today. The Nifty 50 closed at 24,078, down 77 points or 0.3%. Right alongside it, the Sensex closed at 76,910, which is a drop of 326 points or 0.4%. But here's the thing, what's really crucial isn't just today's drop, it's the pattern. This marks the Nifty's 7th consecutive down day. 7th! And the Sensex, it just logged its 4th straight session in the red. The breadth today was, frankly, terribly poor. We only saw 17 advances against 33 declines in the Nifty. There is real heavy pressure in power, mining, and finance, and it is pulling these benchmarks lower in tandem.
Now, before we zoom out to the macro drivers, we really need to talk mechanics because the game has fundamentally changed under the one exchange, one-day split. You absolutely cannot afford to get caught offside by your old habits here. Nifty's weekly index options, they now expire on Tuesdays. But the Sensex, it's running its own weekly game now, completely separate from the Nifty, with contracts expiring on Thursdays. That means Sensex levels and max pain data matter just as much as Nifty on a weekly basis. You've got to track them entirely separately.
Which brings us to the elephant in the room, Bank Nifty. Here is the absolute most crucial rule change you need to remember. Bank Nifty only has a monthly expiry now. It lands on the last Tuesday of the month. That's right, the former undisputed king of weekly volatility is sitting out the weekly action entirely. No more weekly contracts. So mark your calendars because trying to trade a weekly Bank Nifty setup right now is literally a ghost hunt.
So what is exactly driving this relentless 7-day slide in the Nifty? Well, with our local and global central banks officially on hold, the Fed staying put at 3.5 to 3.75% for the 5th time, and the RBI holding at a 5.25% neutral rate, the market is just holding its breath. Everyone is nervously waiting for the Jackson Hole Symposium at the end of August. But while we wait, there is a massive geopolitical shadow dictating the tape every single day. And that brings us to this absolutely critical number, 92. Brent crude is stubbornly holding above $92 a barrel. Why? The 2026 Strait of Hormuz crisis. This is the dominant catalyst in the market right now. The ongoing standoff and tanker attacks involving Iran and the US are keeping the war risk premium incredibly elevated. Now, the U.S. estimates that about 9 million barrels a day are still successfully transiting the waterway, but let's be real, the market isn't taking any chances. This is heavily pressuring oil marketing companies, aviation, and paints, while simultaneously giving a massive boost to upstream oil companies.
And the direct consequence of that $92 crude is flashing red right in front of us, 95.8. That is the rupee staying near record week levels against the dollar. Look, when crude spikes, our import bill just explodes. And that firm US dollar weighs heavily on emerging markets. This 95.8 level is a massive double-edged sword. On one hand, it's a huge imported inflation risk for the broader economy. But on the other hand, it creates a fantastic relative value bid for IT and pharma exporters, because hey, they earn in those stronger dollars.
Today's distinct market personalities were really a study in contrast. Take KAYNES technology. It surged almost 5% today, making it the top F&O gainer. This is pure momentum-driven buying post their Q1 FY27 results, riding high on massive order book strength in electronics manufacturing. But conversely, look at POWERINDIA or Hitachi Energy. It dropped 4.2% as the top F&O loser. And here's the kicker, there was absolutely no bad news for POWERINDIA today. This was purely a rich multiple profit booking session as the entire power and grid sector led the broader market lower.
Beyond those extremes, we did see a few specific names absolutely defy the week tape today. Nippon Life AMC jumped nearly 4%. That's a direct play on buoyant mutual fund inflows and relentless SAP momentum. PNBHOUSIng and PAYTM both climbed around 2.4%, with PAYTM really continuing its path to profitability re-rating. And Coforge popped 2.3%. They're riding that exact weak rupee IT tailwind we just talked about. Slipping into the red, however, Adani Energy Solutions and CGPOWER took a hit of over 3% each. They're seeing their valuations deflate as part of that exact same profit booking in the power and capital goods complex that hit POWERINDIA.
Okay, with no fresh earnings today, the rumor mill is working serious overtime. So, welcome to the Scuttlebutt Lightning Round. We're going to do a rapid-fire breakdown of today's biggest unverified chatter, exchange queries, and what happens if these whispers actually turn out to be true.
Let's verbally rank these by probability and impact. Starting with Seller World, reports suggest Bain Capital is in talks for a controlling stake, which actually prompted an NSE query. I'd say the probability is medium, but the impact, if true, is extremely high because of a potential open offer or control premium. Next up, Tata Tech. The NSE simply asked about unusual trading volumes, which fueled a bunch of large order chatter on the forums. Probability here is low to medium. A volume query alone isn't really news. The impact, if true, would just be a moderate pop. Finally, Vedanta. Chatter says they're raising 13,500 crores post-demerger from major banks to deleverage. Probability is medium, since it aligns perfectly with their known demerger plans, and the impact would be moderately positive by giving some much-needed balance sheet clarity.
All right, enough rumors. Let's pivot seamlessly to the actionable setup for the next trading session. We've seen the tape, we know the macro forces at play, so where exactly are the market's pain points lying for tomorrow's open?
Think of this as your map for the session. For the Tuesday Nifty expiry, max pain, that's the level where option buyers lose the most, is sitting right at 24,200. You've got solid put support down at 24,000 and major call resistance up at 24,500. Now for Bank Nifty's monthly expiry, max pain is pegged at 57,500. The floor, meaning the highest put open interest, is at 57,000 and the ceiling is at 58,000. Keep these anchor points in mind. Especially with the Sensex doing its own thing on Thursdays now, you're going to need to check the BSE directly for that max pain data since end-of-day databases are still kind of catching up to the split.
So how do we actually play this tape? Well, here's a specific upstream PSU idea in focus for tomorrow. ONGC on the long side. Let's walk through the logic here. The catalyst is simple. ONGC acts as a direct beta to crude. As long as Brent holds above 92 due to the Strait of Hormuz crisis, ONGC catches the bid. The action? While this war risk premium persists, the company enjoys massive profit margins on the oil they sell. It's a huge tailwind. But you absolutely cannot ignore the risk. A sudden credible de-escalation between the US and Iran would instantly collapse that crude premium, and that would pull the rug right out from under this trade. It's a massive two-way risk to watch.
And that brings me to a really important, quick reminder. Everything we've discussed today is personal research for educational purposes only. This is not investment advice. You always need to do your own homework before hitting that buy or sell button. And just a quick pro tip for you, the late August ex-dividend calendar is getting a bit thin, but always verify those ex-dividend and record dates directly on the NSE or BSE before positioning yourself.
Look, the markets are volatile right now and the macro picture is undeniably tense. Stop doom-scrolling endless, conflicting financial news feeds that just leave you paralyzed. Rely on the clear, concise data. If you found this breakdown valuable, hit subscribe and ring that bell icon so you don't miss tomorrow's premium explainer setup. I'm going to leave you with this to think about before the opening bell. If the Strait of Hormuz headlines suddenly turn to peace talks overnight and crude plummets, are you going to be the one caught holding the war premium bag? Think about it. See you tomorrow.